Silver price has gone over $93 an ounce, and it's starting to go parabolic. Silver has gone up so fast that the US Mint has shut down silver sales. Costco is limiting the amount of silver you can buy, if they even have any available at all. Earlier this week, CME Group and the COMEX dropped a never-ending margin nuke on silver, and yet the price continues to go up. So the question now becomes, can anything stop or slow down silver's historic rise at this point? Well, let's get into it. Silver is hitting a new all-time high above 93 an ounce. It's up about $6 on the day, and while it's bouncing around quite a bit, the trend is very clear. Gold has also hit a new all-time high above $4,600 an ounce, up about $30 or less than 1%. When we bring those two together, we get the gold to silver ratio, which has now collapsed to 50 to 1. I know a lot of people are considering trading some silver for gold here, but I would not do that. Hold your physical gold. Hold your physical silver. I'm not a financial advisor. I'm just some guy on the internet telling you what I'm doing. Always do your own research. If silver price keeps going up, I expect that ratio to continue dropping from here. Silver has finally taken its rightful place next to gold as a top global asset by market cap. It has blown past companies like Nvidia and many others. Silver has already passed its 2011 inflation-adjusted high. The only record left to break is the February 1980 inflation-adjusted high of $145 an ounce. Will we do that this year? I think it's absolutely possible. Last year, silver had an incredible run, up 148%. And already this year, silver is up 27%, meaning it has already beaten all of 2024, and we're just getting started. So why is silver moving so fast right now? Bloomberg had a pretty good take on it. They say silver broke above $90 an ounce as attacks on the Federal Reserve, expectations of US rate cuts, and a tense geopolitical backdrop added fuel to a blistering rally in precious metals. They also point to growing concerns about the independence of the Federal Reserve, including the possibility of legal trouble surrounding Fed Chair Jerome Powell. The idea is that if Powell is removed or forced out, the next Fed chair is likely to cut rates aggressively, which is extremely bullish for gold and silver. Then there's geopolitics. We've got escalating tensions involving Venezuela, renewed rhetoric surrounding Greenland, and violent protests in Iran that could destabilize the current regime. Citigroup has upgraded its 3-month forecast to $5,000 gold and $100 silver. And speaking of $100 silver, it has already happened, just not in the West. Silver is currently trading around $103 an ounce in China. That is a massive premium over COMEX pricing, and yes, that is in US dollar terms. This tells you everything you need to know. We now have an east-west silver divergence. The East is bidding aggressively for physical metal. The West is suppressing price through paper contracts. China is leading real price discovery, and historically, when that happens, the West eventually has to catch up. That's why $100 silver in the US is no longer a question of if, but when. Now let's talk about the US Mint, because this matters. The US Mint has officially suspended sales of all numismatic silver products. To be clear, they are still wholesaling bullion silver eagles to authorized purchasers. But retail numismatic silver is frozen. Why? Because silver price went up too fast, and the Mint cannot sell silver for less than replacement cost. They've stated that any price increase requires a 30-day notice, meaning we could see no numismatic silver sales for at least a month. If you look at the Mint's website, you'll see products marked unavailable that were priced under spot just days ago. It will be very interesting to see where those prices come back, especially if silver keeps climbing. Costco is also being affected. They're selling out almost instantly, struggling to adjust prices fast enough, and now enforcing purchase limits. That is extremely unusual. Across the board, dealers are overwhelmed. Shipping delays, back orders. Please be patient, banners everywhere. This is historic physical demand, happening at the same time as historic price action. Now let's get into what I call the eternal margin nuke from CME Group and the COMEX. For the first time ever, CME is now setting silver margins as a percentage of notional value, not a fixed dollar amount. This effectively raises margin on silver every single time silver price goes up. I know this part can be confusing, especially for people new to silver, so let me break it down as simply as possible. One COMEX silver futures contract represents 5,000 ounces of silver. Silver is trading around $93 an ounce, so we multiply $93 by 5,000. That gives us a total contract value of $465,000. That's the amount of silver you're controlling with one contract. You don't pay the full amount up front. Instead, you post a margin bond, which is essentially a deposit to reserve that silver. You get this money back when you close the contract or pay in full and take delivery, likely around March, since that's the most actively traded contract right now. Under the new rules, margin is set at 9%. So we take $465,000 and multiply it by 0.09. That comes out to over $41 to $800 just to hold one silver contract. Before this change, margin was around $32 to $500. And here's the key point. Because margin is now a percentage, every time silver price rises, margin requirements rise automatically. No announcements, no emergency hikes. It just keeps increasing. One theory is that CME didn't want to keep issuing margin increase notices, so they switched to a percentage model to make it automatic. But regardless of the reason, the effect is clear. This raises margin on silver every single time silver goes up. This looks like a Hail Mary suppression attempt. It's essentially saying, we're going to make it so expensive to trade silver that people give up and the price comes down. And whether people want to admit it or not, this strongly suggests physical stress. This move is unprecedented. And here's the most important part. Even after this margin nuke, silver is still going up. That tells you everything. In 2011, silver never came close to what we saw in 1980. This time feels different. Silver is already over $100 an ounce in China. Physical demand is overwhelming paper suppression. I can't wait to see where silver goes from here. Thank you all so much for watching, and I'll see you in the next video. Stay tuned to the Silver Thesis channel for further updates on silver.